Millennials, are y'all okay? uh, we have lived through some of the most unprecedented times known to man. 2008-ish recession, 9/11, constant wars, COVID, bank failures, meme stock market shakeup of 2020, inflation hitting highs that was high before we were even alive for some, and even making a band. But while this is hilariously painful to think about, um, and I'm more than likely missing some stuff, the, some of these unprecedented times may actually be very precedented or calculated. But let's get into it. Okay, so boom. So no matter whenever the Federal Reserve or Jerome in his house decides they want to declare a recession, granted though, we've seen in multiple recessions that they took actual years to declare one, but yet and still. Here's what a recession is. The economy is going through dumpster diving right now, and it's been doing so before even the penny press, but yet still each pocket of generation has been going through their own ish. And as a card carrying millennial, also mean carrying, that I wanted to pick on this a little bit because of some article that I saw in Forbes saying not only is millennials getting cooked, that they're getting cooked when it's could buying a house, but also getting a good interest rate, and then possibly missing out on what could become a rally in the stock market due to the fact that the matter is student loans is getting ready to kick back in, mortgage rates are going back up, life is life, and stuff is going on, and millennials just stay unable to can because we have been through too many unprecedented times. But one of the things that we are known for as millennials, and I love this, is that we are very big on de-risking. Um, that anything that could potentially hinder our money, wealth, generational wealth, anything like that, we are opting out. We're not signing up for it, and I love that for us. But they reference that de-risking in the article, that it might hurt us a bit. And but they have to keep in mind though, Forbes, whoever wants to write these think pieces, is that millennials, all generations, but millennials in general, have been through the most. I know we're not boomers, but still, life has been booming at our heads, and they also have to be reminded that this generation went through 2008 recession, which and still impacts us day to day. No matter if it's professional, paper, meaning our money, or personal, that time stamp of it all, we were just off of the 9/11, just off, so much stuff was going on and hitting us at the helm that we are still going through it now and feeling that, and we kind of have PTSD in a sense to how all those unprecedented times is impacting the present and going to be impacting the future. Just calling a thing, and let's not get into just only picking at millennials. That other generations are going through their own money hiccups in a sense. Boomers and Gen Xers are having, trying to figure out that retirement situation, no matter if it's preparing for retirement, being in retirement for a long period of time, or just trying to figure how to maneuver the aspect of having a pension. Pension wasn't enough, not being able to save due to the fact of they were trying to figure out their money story, to now in retirement, possibly if it's involuntarily having to pick up a job, and or for those, especially in Gen X's, trying to figure out, did I am I saving enough, and going to do other measures such as the backdoor IRA or contributions, because they see how much it goes and how the fact that probably by the time that they reach retirement, it might not be any Social Security. And then for those in the Gen Z and Gen Alpha, they are getting the business handed to them in some of these articles, where it comes to them saving as well as handling debt, no matter if it's buy now, pay later, no matter if it's I hate to say this, student loans coming, or just even strolling on social media and seeing the fast fashion and day in their lives and stuff on TikTok. It's just all generations are going through it when it comes to their gains or whatever gains they wish to obtain. But the thing of the matter is this whole group project that we sign up for is we are failing right now, and to add in the mix that a potential recession of sorts is different layers to it or depths to it is like what the heck else next. The notion that we are going to see one declared, but it took years for the other ones to be declared. So why are we sitting here thinking that people are not going through it themselves? The unemployment has been beyond words. To see somebody every day, it was just to be seen as being tech. Now it's going into media. Now it's going to other sectors. And now people are feeling that AI is going to take their job or any livelihood that they could have. It's a mess right now. So, one of those areas that many are confused, no matter the generation that you may find yourself into, is the seeing this recession and determining how can I not only save, I talked about this in previous content, but most importantly, invest. And if you've been following me along for a while, that one of the things of my isms that I love to say is that you have to find value in volatility. Because if you think back to the 2008-ish recession, that people love to say millionaires were made in the recessions, which is true. We've seen this historically, but in the happenstance, that people are not feeling pushed to invest, let alone contribute to their 401k or whatever retirement account that they have. And I wanted to call out some points beyond outside of my freebie, which was going to help you with the 10 recession mistakes not to make. I wanted to still just make this standalone video about investing or beginning into investing within this uncertainty of the economy. Is that going back to the finding value in volatility is also finding value within you being an investor, and in what ways can you invest no matter how depressing the economy can be for you, or just you're seeing the outside look at it. But I wanted to just call out this separate video to help you prepare your portfolio no matter whatever happens to this show. So the first one, I want you to review your portfolio. You know, I love to say audit your freaking wallet. I have videos about this, especially when it comes to your checking, but I wanted to get a little bit granular here when it comes to your investing. Take a look at the companies and sectors not only that you have already invested in, but also that is on your watch list. And I want you to identify how likely are they to perform during this recession or any shaky that we could see. Um, Especially those companies that are within the goods and services area. You may want to consider, though, one of the things is that people will see, oh, it's risky. And you know what I said about finding value in the volatility. Look to reducing your exposure, meaning how many shares or companies that you have, to companies that are highly cynical. When I say cynical, that means they could be impacted by the economy easily, and also they're heavily dependent on the consumer spending aspect for them to keep afloat. One of the things that I have been seeing, and I kind of want to call out, not only now, this is a smidget here, but later on, is that you have to fully understand how the company not only makes money but handles money and can grow within no matter the show they're in. So when I say how they make money, where are their revenue streams coming from? Is it only siloed to one thing, or are they diversified into that? Then how are they handling money? Are they able to say, do they have cash on hand? Are they are handling their operational expenses well? And then how are they actually moving through? Are they making pivots to say, we're going to not do this specific thing anymore, but move into this other area that's going to sustain us? But one of the things I have been calling out about specific companies like Microsoft, like Apple and Amazon, and of course the big ones, is that they have cash revenue. They have cash revenue, so they don't have to depend on going to get additional lines of credit, going to obtain any buybacks, but buybacks is not really bad, but you understand what I'm saying. That they have money to either go acquire other companies to give them a healthier bottom line, or they're able to stay afloat within their operations. So the same way that it's important for you when it comes to keeping your budget, saving money, and then how you spend money, it is important to understand how the companies that you not only hold, but you also want to purchase, how they actually align to those same mannerisms that you do when it comes to your money. And reviewing and auditing your wallet, I said that it was more than just your purse, but also your portfolio, purse, wallet, whatever. It was your portfolio and how you're able to maneuver and purchase companies to keep, or that you need to keep them, or maybe even expanding your exposure. When you hear me say exposure, it's meaning what companies, funds, sectors, or anything are within your portfolio. So that's going to allow you to understand what is your exposure. But this is why it's important, because if you're noticing that you're within companies that have been impacted badly, in not only the 2008 recession, if they were public then, but how they handled the pandemic and how they're actually pivoting through this pandemic. That is going to give you clear indication to know if I need to purchase this company, if I need to hold this company a little bit longer, or how do I need to handle not only the companies but my portfolio. The next thing, just like companies talk about diversity and sometimes they don't follow by it, but yet we move. How you diversify your portfolio is going to allow you to grow during this scenario. Making sure that your portfolio is diverse across different sectors. Didn't I just talk about this in number one? And how can you actually reduce your risk tolerance, or your risk appetite? But I would call out, if you were investing in the 2008 recession, look to see how you reacted during the 2020 stock. So that was around May, June, probably going into July of 2020. So just look to think back, to do a little audit of how were you reacting to that. If you was like blowing a gasket, your risk tolerance is not that strong. You might need to actually move into not only diversifying your stock, but actually putting more of your holdings into ETFs and index funds, because it's not like if something happens to one, your whole, and you have an overindulgence of one fund or one stock, that it will, if something happens, the whole goes away. Not, don't have all of your eggs in one basket, and if that one egg breaks, you can't eat later. Your portfolio stack needs to be diversified, and like I called out about ETFs and index funds, is very important, especially during now. And don't only do this for your portfolio, your brokerage account, but also looking to see is your retirement fund diversified. Some funds that everybody's been throwing out, and I can kind of concur on those. Some, when I say certain sectors or groups, that just doesn't mean that you just go purchase all of them, all of the, but anything. I'm just throwing anything. You really have to really research before you reach for your wallet during this time, because the sector could be doing well, the company or the fund could be doing. It is what it is. So everyone's been talking about what's going on with defense stock due to the fact that what's going on overseas, healthcare due to for what we were seeing with Amazon and other companies, especially when it comes to AI. Utilities, it is what it is. Consumer staples have performed well no matter what, because regardless of how the economy reacts, people need to watch their backs. So you have to see and determine what different sectors are you well versed in or no, and then move out to determine, this is how I'm going to stack my portfolio. The next one is rebalance or recalculating. Regularly looking at your portfolio holdings, your retirement holdings, even your exchange holdings, to determine how is it aligned to not only your goals, I love calling that out, but also, like I called out previously, your risk tolerance. And during a recession, some of your assets may perform better than others, and you need to rebalance and say, okay, I'm gonna shift foot here, I'm gonna shift foot there. But one of the things I want to call out is that I don't want you to just pay attention to how they're performing now. I want you to take that insight to understand how they're going to be performing later, because companies that you buy that have still been standing the test of time during this show, they're going to more than likely revert up later. So even if companies are, oh, the stock was up years ago, but now they're down, but more than likely they have the likelihood to actually go back up. And just level set everything from your portfolio to your retirement fund to your exchanges to even how you're stacking your money. Everybody's coming out with saying, oh, at first it was I bonds, I bonds, I bonds this, I bonds that. I'm gonna put my money on that, and now the rates are starting to shift away. So it goes back to understanding what are your financial objectives and what um, ways can I handle when it comes to my stock stack or just my stacking of cash. So understanding that every so often you're going to have to peek under the hood to understand what's going on with your stocks, what's going on with your crypto holdings, anything else that you're holding, rather it's gold or precious metals, and then also even real estate. Commercials getting hammered right now. But just understanding how do I need to rebalance, meaning if do I need to take something back? Do I need to purchase something else to make sure I am well rounded? So you figure out what are some of the valuable insights that you can get, and then how are you going to implement within your portfolio? That is something that is key. Um, but the thing is I not only want you to watch what's going on with the economy, but I want you to also the global world economy, because I believe Taiwan actually just declared that they're in a recession. But yeah, I want you to also look to see what's going on within your own economy to understand what indicators that you need to watch for. If you're noticing, oh well, actually inflation is impacting my budget, so I need to move this here. Actually, what's going on with the Federal Reserve and what they're doing with tapering with the interest rates is impacting how much I'm paying for car insurance or how much I'm paying for this and that. So I need to move it around. But also asking questions on how able am I to save at the rate that I am doing, and where do I need to save. The way that you're watching what's going on in the news, you need to watch what's going on in your within your wallet as well. And then avoid making emotional decisions. Do not get Carl Thomas when it comes to what's going on with investing. Don't panic sell. Do not panic buy. Close your eyes. Don't close your eyes on your investments, but keep a close eye on how they're performing. I don't want you to purchase something knowing that you could have done your research previously and saved yourself just in case you were to purchase a company that was popping and then you noticing that they dropping and you didn't move your money quick enough, like we're seeing with who is that First Republic Bank pretty much halted multiple times during the last year. So imagine if you would have held on to it when it was a penny stock to only see that they're getting acquired by Chase. During a recession, it could be very tempting for you to panic sell or buy within any kind of investments, whether it's stock, real estate, or what have it. But however, it could be the worst thing that you do. One of do your research, but also keep in mind about your long term strategy. One of the things that I called out and I'll take notes, you know, that is short term handling generates long term harvest. So how you're handling your money, no matter if it's your portfolio, no matter if it's your wallet, no matter if whatever, it's going to impact long term holdings and harvest, meaning how things perform. That you're not moving with emotions, but you're moving with insights to understand how to implement for the now as well as the later. And of course, you know, I'm going to tell you to stack your money. Not only should you be stacking your cash for emergencies, but you should be stacking your cash for opportunities. One of the things that I've been answering questions is around where should I put out my money? No matter if it's a high yield savings account, no matter if it is a CD. Child, you in the next three, the rates for both are amazing. But even if you were to open up a 3 to 6 month CD, or opting into auto transferring whatever you can. You look at your budget to say maybe I was contributing $100 a month per se, as they were telling me to do, but I know it's within my budget that $100 is what's actually stretching me. So I need to move it back to be probably what 50, 75. Those little small ebbs and flows will actually allow your money to grow. So like I said, open a 3 to 6 month CD, put your money there. So whenever things were to go south, that you not only have a staff to keep you afloat, but maybe for you to actually go purchase some property, for you to actually go purchase a lot of companies that may have declined, that you know they will stand the test of time, but right now they're down. So when it comes to preparing for a recession, no matter if it's a mass or a selective recession, that it does not guarantee that you will to not see any losses. We have seen millionaires taking hits, billionaires taking hits, down to regular taking hits, which I am one. But the thing that I've been saying though is that you have to help yourself minimize any risk of losses that you could see not only within your portfolio but within your paper. And what I called out previously is that short term um, handlings generates long term harvest, and I stand by that. But the thing that I really want to do in this video is call out some of those ways. Let's just go ahead and run through them again. The first one being to audit your portfolio. The second one is for you to diversify your holdings, but also I'm gonna call this out: diversify your watch list. One of the things that I tell my clients to do is that if they know what's in their portfolio, knowing within their retirement fund, take those tickers, dollar sign, the letters, and then go and create a watch list. This is going to keep you from watching. You can watch the company, watch the fund, but you're not going to watch and see what goes on with your portfolio value. But diversify, knowing the different ways or the different sectors and companies and funds that you have within your portfolio. Number three was to rebalance, understanding when you might need to shift your exposure or holdings within a certain sector. But also, the like number four called out, consider alternative investments and alternative um, holdings. So no matter if it's gold or REITs, doing your research before you reach for your wallet. The next one, number five, is to be informed. Stay informed. Do not. I know I give a lot of information. I know the social media will give you an influx of information, but knowing not only what can you do per se to prevent any kind of loss, but also to position you to be able to pick up opportunities. The next one, and number six, being monitor your investments. I told you a hack a few seconds ago about creating a watch list of not only the companies that you want to purchase, but also the companies that you currently hold. Game changer. And then number seven, avoid making emotional decisions. You know how you be wanting to send that double text. You making emotional decisions is like sending a double text to not only your wallet, your generational wealth, but your portfolio. Just saying. So don't just be saying, "Oh, I need to sell my stock. Oh, I need to unload." I remember that back a couple years ago was when people was buying up penny stock, and I was telling them to research that because it's not going to end well. Or people was purchasing meme stocks. They reacted and just brought because they saw the hype, but they didn't do the homework to understand how to maneuver in case they do the stocks go up or down. Anywho, um, the thing I keep repeating is short term handling generates long term harvest. Then of the last one is for you to stack your cash, not only for emergencies, no matter if it is you lose your job, something happens to your car, or medical bills come out of nowhere, but also build for opportunities, such as being able to buy a property that you find going foreclosure, because a lot of commercial and a lot of real estate um, properties are going on foreclosure, or maybe even buying a car at auction to go put on Turos for you to get for you to get for you to get another income stream. So stack your cash for opportunity, but also be stern within your intentions, but flexible within your methods. Meaning, what my intention is to keep myself afloat. Hey, here's how I'm going to do it. Here's the different income streams, and here's what I'm planning on doing with those income streams. And then, how much money is it going to take me to make some more money? I keep saying this, but how much is it cost to actually start the income stream? How much am I anticipating it to for upkeep of keeping it going, and then how much money is it going to make me, and then what am I going to designate that money for. One of my sayings is that the data determines the decision. So the data that you get not only about a company that you're researching, but also your own money will determine on how actually you're going to be deciding how to move forward. So run this video back a couple times every so often as we go through this mess for you to stay on top of not only how to make millions during a recession, but to build means to be above where you are now. Because I don't want us to get sidetracked on not preparing for a recession until a recession is at our doorstep and we cannot look away. So let me know in the comments if you have any additional questions or if there are any key takeaways from this video that will help you now and later. That's it.